ELF stock is down over 70% from their all-time highs in 2024, and this might be the dumbest drop I've seen in the market for a very long time. Unless I'm missing something and I'm the stupid one here. Anyway, the drop is done because of how severe it was. There are two primary reasons the stock is crashing in my opinion, and the first one is tariffs. ELF produces a significant portion of their products in China, and as we know, Trump slapped two separate 10% tariffs on China in 2025, and that's on top of existing tariffs. However, this is a complete overreaction in my opinion because ELF's products are already so cheap. If we look at this slide from their last earnings call, you can see how cheap their products are compared to the big cosmetics companies. And keep in mind, ELF buys these products for even less from China. So, a product they're selling for $14, they might be buying for less than $4. And that's a made up number. I don't know the actual price they buy their products for. Anyway, factor the two 10% tariffs into that price. So now they might be buying that product for $4.84 instead of $4. And they're likely just going to pass that cost onto the consumers who would then pay $14.84 instead of $14 for a product. And I don't think that's enough to discourage them from buying their ELF products. Trump could even slap two more 10% tariffs on imports from China, and I still wouldn't be worried about ELF's numbers. The second reason I believe the stock is down is because of the company's slow growth outlook for the second half of 2025. The reasons they gave for the slower growth were things like weaker than expected demand in January, natural disasters in California which distracted their consumer base, political changes, uncertainty around TikTok, which is largely how they market their products, and of course tariffs. However, I see all of these things as short-term issues, and I agree with the management team when they say that the second half of 2025 doesn't reflect their overall growth ability. After the drop, ELF now trades at a forward PE of just 18 and a 2-year forward PE of 17. That is ridiculously low for a company that grew their revenues 31% year over year in the last quarter and have been growing their revenues at a rapid 34% per year for the last 5 years, and they expect that overall trend to continue in the future despite these short-term issues. Earnings per share, or EPS, is also growing nicely. However, the company isn't even focused on profitability at this point. They just want to gain more market share in the US and outside of the US, so I don't pay much attention to EPS at this point. And lastly, their international sales growth in the last quarter was 66%, and I expect the international segment to be a much bigger part of the business in the future. So, in my opinion, I'm currently getting a super high growth company for really cheap, so I'm going to continue to buy this one. Let me know what you think about ELF stock in the comments below.